Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Wednesday, January 8th, 2025. Let's take a look at the charts. I'm going to jump to the most relevant for the day. And actually, before I jump into this, I just want to mention, because I sometimes forget, that on Tuesday we put out a stock pick on Micron. You might want to check that out. You can see it for free if you go to wickedstocks.com and take advantage of our 5-day free trial. You'll also be able to see not only Micron, but the daily Triple Q, the daily SPY, NASDAQ 100, S&P 500 analysis, all in video format, weekly Apple stock analysis, 2 stock picks every week. For the next 5 days, you'll see both the new stock picks coming out. Check it out. You'll be able to see it all for free at wickedstocks.com. So, Nvidia, big sell-off. Put out a new high, a new all-time high by a hair on the opening bell Tuesday, and proceeded to just sort of fall apart as we continued through the day, falling to and even below by one measure channel support. 141.11 is a descending channel top. Now there's an inside channel as well at 138.15, but I do like this rising channel bottom at 140.25 and this former descending channel top at 141.11, despite the fact that we closed below it. I don't see it as a sell signal just yet. I do think if we close below 140 and a quarter, we can anticipate this market to continue falling apart into the upper 120s. 126.97 to 127.59. So is there a big sell signal? I mean, if you're a candlestick enthusiast and you're a bar chart analyst, you can see a bearish engulfing pattern on Tuesday with that new all-time high and closing below Monday's low. That doesn't look very bullish. But in terms of structure, I still see 140 and a quarter to 141.11 as an area you can buy and hold. You may be long already following the buy signal that occurred Friday of last week above the 141.11 formation. Bottom line, holding above the low 140s, holding above, excuse me, 140 and a quarter to 141.11 will keep a longer term channel resistance in reach that I'm going to find. Well, there's the weekly chart. Bear with me here for just a second. Will keep channel resistance in reach. We just don't have it. We just don't. There it is. I guess it's as good as I can do. 168.82 is a weekly channel top. 141.36 is the weekly channel top, the weekly version of what I've been showing you for the last few minutes at 141.11. So it is about the same thing. If we can close Friday above 141.36, we maintain a buy signal up to 168.82 that could be realized by the end of February, the next couple of months anyway, and that remains intact. I mean, I know by a thread, by a hair. In fact, if we open today below 140 and a quarter, yes, there could have some intraday play at 138.18, but what played out, Tuesday afternoon can continue to play out Wednesday afternoon. And I don't see 126.97 to 127.59 in reach today, although we could come pretty darn close. We have nothing but minor points on the way down. And so I really don't want to get hung up on any of these. I mean, they're all carefully chosen. Every one of these minor points is found on this chart, whether it be a Fibonacci level or whatnot. But even on an intraday basis, the only thing that I think you might trade off of, and it's actually very close to 140 and a quarter, is the 138.18 inside channel. In fact, there is a scenario where we could break 140.25, test 138.18, and manage to close the day above 141.11, which will maintain the structural integrity of that buy signal that played out last week, anticipating the upper 160s over the next couple of months. And ultimately, quite possibly, we could see the 181.33 area over the next few months. Let's put it that way. So that covers the downside pretty well. That's on the weekly chart. You can see 140 and a quarter, 141.11, above which 149.43 is in reach today. quite possibly. It is the high settlement price that was put out on Monday. And once again, all the minor points have been carefully chosen. But because of the high volatility right now, we really don't want to encourage selling, the low to mid 140s on the way up today. I do think 149.43 is attainable, holding above 140 and a quarter. And if we close above 141.11, that maintains 152.89. This is a 1 to 2 week objective, and we saw it in less than 3 days, 152.89. And we've come falling away from it. But I don't see a convincing route to the downside unless we actually close below 140 and a quarter today. And so if you went long over the last few days, anticipating not only the low 150s, but the upper 160s, as articulated earlier in this video, you don't want to stay long with a settlement below 140 and a quarter. And this is where your own personal risk management comes into play. It could be merely opening lower on the day, opening below, let's say, the 140.01 low that was put out on Tuesday. If we open below 140.01, that's a gap lower opening. It's also below 140 and a quarter. That in and of itself could be sign enough to exit a long position, because we could see this market continue to fall away as we move through the rest of the day. But if you're going just day to day, closing below 140 and a quarter, 126.97 to 127.59 becomes a 3 to 5 day target, which we could see within 1 or 2 days with present volatility. 126.97 to 127.59, well suited to absorb selling through January, through February. From here, we can round up to not only 152.89, again within 2 to 3 weeks, but onward and upward into the upper 160s, into the low 180s. Ultimately, our big long-term resistance is still well above the market at 181.33. And that upper area, not out of the question by the end of the second quarter, so long as we continue holding these convergent channels, 126.97 to 127.59. Now, we're not going to see it today, but if we did close below 126.96 on Friday, that sets up 102.82 as a realistic 3 to 5 week objective where we could bottom out into the second quarter, but we're a long way from that. We're not even expecting the mid to upper 120s just yet, unless we close today below 140 and a quarter. Until then, if you're still long, I have no problem with that. We can spring back into the low 150s again within 3 to 5 days or less. And as we continue into February trade, we can push into the upper 160s and climbing. Keep that in mind. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. Check out the Micron stock pick. We will not be delivering analysis, of course, on Thursday, President Carter's funeral, but you will have Friday analysis. I'm not sure when it will be delivered and uploaded to YouTube, but you will have it no later than Thursday afternoon. I'm going to leave it at that. I will be back with Friday's NVIDIA, and you have a great day.